So if you've been trading for a year or 2 years and you still haven't hit profitability yet, then it's possible that you in your brain have too many strategies. You've absorbed all of the free resources online on YouTube and dumped them into your brain and said, I'm going to trade this strategy and that didn't work. I'm going to trade that one and that didn't work. You've probably tried ICT, smart money concepts, Wyckoff, Elliott waves, maybe some proprietary indicator system someone sold you for $500 and you're still losing money. The truth is that the average retail trader doesn't need a complicated strategy. You just need one simple objective strategy that works in multiple market conditions. And today I'm going to show you exactly what that looks like. If you don't know me, my name is Sage and I talk about trading, and I've been trading for about 5 years now. And I like to approach the market from a lot of unconventional ways, because a lot of conventional ways haven't served people. One of them being negative risk to reward, one-to-ones and stuff like that. I'm flexible with how I approach the market and use a number of ways of risk management, but I have figured out how to be profitable and I have figured out what works for me. What has worked for me is simple. And I like Alex Hormozy's model. If you don't know him, he's into business, and he says that simple scales and fancy fails. And I do feel like a lot of people have been allured into trading certain strategies that are way too fancy for their brain. Your brain likes to do simple things. So let's focus on simple. All right, so I trade quarter levels. What are quarter levels? Quarter levels are round psychological numbers that price naturally gravitates towards. So thinking of 100, 105, 110, 115, 120, and so on. These are levels that institutions, algorithms, and retail traders are all watching. Why? Because humans like round numbers. It's psychology. That's I don't know if you guys picked up on that or not, but a big part of trading is psychology. When Bitcoin hits 100K, do you think people are just casually ignoring that level? No, everyone is watching it. Everyone has orders around it, and that creates support and resistance. So why is that powerful? Well, it's objective. There is no guessing. Quarter levels are mathematical. If price is at 103, the next quarter level is 105. There are no interpretations needed. You are not drawing subjective trend lines or trying to identify if something is in an order block or a demand zone. The levels are clear as day. The levels are clear and objective. So that's the first one. Number two, it's flexible. Quarter levels work in ranging markets, trending markets, and volatile markets. Why? Because price always moves to key psychological levels. It doesn't matter if we're in a bull market or a bear market, price respects these levels. It's simple. Number three is it's simple. You don't need 10 indicators. You don't need to memorize 47 chart patterns. You just need to know where is price now. What's the next quarter level? And is price likely to hold support or resistance at these levels? So let's give you an example, okay? Where's price now? Price is in between 190 and 185. This is the Solana chart. This is I think Bybit. So price Solana chart on the 30-minute time frame is in between 190 and 185. For the last few quarter levels, so looking at 175, and look how perfect this test is, how it stopped exactly at 175 right here. So it stopped exactly at 175, went straight up to 180. So is it true or false? Is it true or false that after Solana tested 175, it went to the next quarter level? It's true. Okay. So it went to 180, but there was still enough supply to push the market down, but it didn't go all the way back down to 175, and it actually went to 185. So now we have 175, 180, 185. What's next? 190. So let's zoom out. Did Solana get to 190 after it reclaimed 185? It chopped and consolidated here for about pretty much about a day, and then Sunday morning at 4:30 a.m. it went straight to 190. So we have a clear trend going on. Solana is constantly reclaiming levels. So one would say okay, maybe I'm in for some buys here because we reclaim 175, 180, 185, 190. What's next? 195, 200. So I'm possibly potentially taking buys at 185, at least looking for the rotation back to 190 because we did it the first time. So why can't we do it again? So you see how simple that is? Like, there was nothing complicated in anything that I just said there. Like, I didn't say anything about order blocks. I didn't say anything about fair value gaps. I didn't say anything about liquidity sweeps. I just kept it clean, objective price action around key levels. So this is what I mean when I say the average retail trader doesn't need complicated strategies. You just need one simple system that gives you clear entry and exit points based on objective levels. And you don't have to use limit orders like me. Like, I use limit orders to get in exactly where I want to so I can get the optimal RR that I'm looking for. You could also just wait for reclaims. So if you look at this Solana chart, you can wait for a reclaim to happen at this level and wait for a high probability candle, which is usually a bullish engulfing candle or a pin bar or something like that. So we had two 30-minute bullish engulfing candles. Your stop loss will most likely be dependent upon the ATR or wherever you want to keep it. If you do want to figure out, okay, we got a swing low right here, I am willing to put my stop loss right about there, and I'm looking for the rotation to the next key level, which will give me about a 1 to 1.5 R. Did you get stopped out? No, you did not get stopped out. And in fact, it looks like it gave you about a 2R multiple. So not bad. 2R trade right there. Just using something that is clear and objective as that. And I didn't say anything about order blocks, fair value gaps, nothing, no Judas swing, nothing that's like trying to fry your brain as you're trying to figure out what's happening in the chart. It's just, let's look at the price, let's look at the key quarter levels, and then figure out, are we buying or are we selling? Now, here's the thing. Even with a simple strategy like this, most traders still fail. Why? Because they don't have discipline and they don't have community. Discipline means sticking to your strategy even when you hit a few losses. It means not revenge trading. It means not over leveraging because you're impatient. It means trusting your system even when it's not working for a few weeks. And community means you're surrounding yourself with other traders who are executing the same system, who can hold you accountable, who can help you stay consistent. And this is exactly why I started a community myself on school, because I wanted to create a space where I can break down my exact quarter level setups, where I can post trade ideas in real time, where other traders are learning and executing the same system. As one person gets better, everyone gets better. And as everyone gets better, we all hit our objective because we're all playing for the same team, which is, hey, get money team. I feel like trading is one of the unique markets where you can actually all win together. It's not super competitive. Like, maybe if you're doing ecom, like, you want to be the dominant person in the space. Like, there's more than enough money in trading for everyone to succeed. But if you don't have the right community, the right people supporting you, the right mentorship, the right trading strategy and system, it's going to be hard for you to do it on your own. If that sounds interesting to you, hit the link in the description box below. So let's prove that this works in every single market for people who trade Forex, stocks, whatever. This is Euro, JPY, EJ, and this is the daily time frame. This is 172.5, moving in an increment of, I believe, $2.50, which is about 250 pips. Look at how price stopped exactly at this level, exactly here. Absorbed all the orders, and then went straight up to 175, and then retested 175 with an exhaustion bar on the daily. We're probably going to 177.5. It's that simple. I swear it is that simple. I'm not talking about no liquidity grabs, no order blocks, just raw price. That's all I have on here. It's just raw price. This indicator that I built myself because I wanted an indicator to also give me more information, like whether or not, how many reversals happen at the level. So it's giving me that 172.5 is a 4-star level, 175 is like a 1-star level, And it also tells me the probability of us reaching that level. So right now there's a 73% chance that we come back and retest the level again because we're so close to the price. And there's like a 16% chance that we're going to come back down to 172.5 because we're so far away from the level. And it tells me how long it is going to take to get to that level. So it's going to take me like a week. It's going to take about a week to get to this level, possibly. And there's been 24 reversals off the level. So I wanted a more detailed analytical view of each level and the data and information at each level. So these are the minor levels here, the minor levels on a daily time frame. And we tested 175 exhaustion, so good chance that we at least go up to 176.25, which is the half level. So it's about $1.25 so 125 pips. So it works in forex, plain as day, clear as just clean. What level is this? 170 exhaustion, exactly at the level, like exhaustion. Look, bruh, look, test. Where'd it go? Straight up to 172.5. Pull back to the half level, exhaustion. So it's like you don't have to overcomplicate this stuff. It's just other people have an incentive to overcomplicate it for you so they can feel like a very strong trading guru having to explain things that only they can understand. All right, so here's the price of gold, 4,000. Once we clear 4,000, where do we go? Straight to 4,250. Straight shot. Gold has been like unbelievable. Gold is like unbelievable right now, bro. Like unbelievable. But look, we broke above 4,000. We had a daily bearish engulfing candle, and then we reclaimed the level on the daily time frame, which is a major deal. We're at all-time highs, and people went long. So never think the price is too high for you to go long. It's never too high. It can keep going. The market can stay irrational longer than you can stay solvent. So we reclaimed 4,000. Where did it go? Straight to 4,250. Right now, it doesn't even look like it's stopping. It look like it closed. It did close. It closed above 4,250. It closed at 4,251. So it potentially could go to 4,500 here. There's nothing, like, it's been in a monster trend. Let's zoom out. Monster trend. Like, don't try to call it. That's what the average retail trader tries to do. It tries to call the top. People just try to call the top all the time. Like, you don't know where the top is. This is something. Gold is moving off of macroeconomic factors right now. That's just a fact. So like, people are losing trust in fiat, and I'm not gonna get into it, but that's why the market is doing what it's doing right here. What is this? 375. Exact same thing that happened at $4,000 on gold. We bearish engulf, reclaimed in 2 days, and then went straight to 4,000. It works in every market. It's simple as that. It's as simple as that. It works in every market, and whatever direction that you want to take it in, it works. I can't even. I was trying to find a bearish example on gold, but I can't because it's just it won't stop, bro. It just won't stop. Gold won't stop, bro. It's been going, and it works in stocks. This is the Tesla chart, and I'm using my other indicator because I like to the stocks trend often, and having moving averages on your chart is very helpful. So let's look at the Tesla chart. Okay, it went from 300. It tried to fail to hold 300 multiple times on a daily. So failed, retest, failed, reclaim. After it reclaimed 300, right where my mouse is, where did it go? It went straight up to 350. Technically, it went to 325. That's where I would have marked out, but my indicator went in a higher increment. So it went straight to 325, and then it went to 350. It failed 350. It came back to 325, and then it came back to 300. And it was oscillating in this $50 range for like months, 90 days. 90 days. This is a reaccumulation structure, by the way. When the market starts to go into a range like this is an accumulation. On the uptrend, this is a reaccumulation. So this is a reaccumulation with an ascending triangle. So this was super bullish. And I bought some yield max. Actually, I didn't buy the Tesla shares. I probably did, but I know I bought some yield max of Tesla. But look at this nice ascending trend line, and then we went parabolic and we broke out of that range. So after we cleared 350 right here, which is this line right here, after we cleared 350, where did we go to next? 400. And there was we went so far above 400, we didn't even test it. So we're most likely going to come back and test 400 because it was so bullish that it went straight to 450 after it broke 350, which is that a 20% move or something? Oh man, that boy good at math. 27%. So it's probably going to come back to retest 400, but this isn't a big uptrend. So like, why wouldn't you dip buy this or at least take a position around 400? Like, I don't really like 400 because like I usually like to look for consolidations. 350 is definitely a banger of a trade for me. For if I was going to go long on this asset, it's a 4-star level. Look at this. It's a 4-star level. 24 reversals happen at this level. So yeah, I'm definitely thinking about, well, I would mark this up just like this. And I'm like, okay, set an alert. When Tesla come back here, this is what I'm looking for. A reversal off this level to 400. That's exactly what I would do. Would it be below the 200 period moving average? Yeah, but consolidation matters more than whatever the fuck the moving average is. Like, this just keeping it a buck. Like, every time the price was below the 200 period moving average, it was a good opportunity to buy. So you can't just have that be law. Like, it's helpful for trailing stop losses and establishing trend, but you can't always make it law that you only buy above the 200 period moving average because that's going to keep you out of so many winning trades. So to recap, stop strategy hopping, pick one strategy and master it over 100 trades. Keep it simple. Complicated strategies like smart money concepts might work for some people, but the average retail trader, they're overkill. You don't need 10 concepts. You need one clean system. Use objective levels. Quarter levels are simple, flexible, and based on price action that the entire market respects. Join a community. Trading alone is hard. Surrounding yourself with people who are on the same path, super valuable. If you got value from this video, smash the like button, subscribe. If you haven't already, drop a comment below telling me what's one strategy you're committing to for the next 100 trades. I'll see you in the next one. Trade smart, stay disciplined, and I'll catch you inside of the community.